This is Scott Becker with the Becker Business Podcast, the Becker Private Equity Podcast. These are 14 of the stories that we're following today, and thank you so much for listening. First, the markets fell yesterday, but point up today. We're about midday today and still pointing very much in the right direction. Let's hope the day closes well. Second, Snapchat shares are crashing. They're down more than 17% the last time we looked. It's reporting lower ad revenues. Its loss for the second quarter grew to $263 million. Third, telehealth giant Hims & Hers barely missed on its revenue estimates, but its stock dropped more than 12% on Tuesday, so it took it on the chin yesterday. Fourth, the trade deficit fell to $60.2 billion for June. Before you give too much applause to that, and that is the lowest trade deficit in a couple of years, it's not all good news because both exports and imports fell, but imports fell by a higher percentage amount, thus reducing the trade deficit, but also means a slower overall trade. Fifth, the service economy is slowing. That was reported in June as well. We see some colleagues being laid off from some of the big consulting firms, and that's part of the slowing of the services economy. Sixth, Palantir keeps surging as revenues rise. They've risen to more than $1 billion a quarter. The stock jumped another nearly 8% on Tuesday. Seventh, Lucid Motors and Rivian each point down today. Both missed on earnings estimates, and both are expressing concerns about the impact of EV credits going away. Now, one person tweeted to me, if a business relies on government credits, it shouldn't be a business at all. And I think there's already some truth to that as well. Eighth, the National Football League is taking a 10% stake in Disney's ESPN. That's an amazingly interesting deal on so many different levels. The NFL is also giving to ESPN the NFL Network. So we'll see how that all plays out. Ninth, the Wall Street Journal reports today that both the right and the left were exaggerating the impact of tariffs, that the headline is billions in revenues, but no economic earthquake thus far. 10th, Gartner, the consulting company, saw its stock drop more than 27% yesterday. Well, it beat estimates on revenues, earnings. It saw its core business line suffering from slower growth. That's its contract business, as it sees more and more concerns from the perspective of AI and more. 11th, AllianceBernstein is up nearly 8% year to date. It's moving in the right direction. Some of the brightest people I know work there. 12th, alternative asset behemoth, the largest in the game, Blackstone, is now down just about 3% year to date. And 3% down might sound bad, but PE firms, private equity firms, have been having a very challenging year, and they're moving now in the right direction. One of the things that's nice about Blackstone is they're really starting to improve their hiring game as they reach out to some of the brightest people in the business to bring them in to Blackstone. Sort of like how Facebook, Meta Platforms, is hiring engineers and AI engineers from every place around the board. We find Blackstone doubling down on the brilliance in its hiring practices. 13th, Astera Labs is up 18% pre-market or up today. It's moving in the right direction. We directly, as a family, own Astera Labs. We have shares in it, so we're thrilled to see that happen. We own it by chance, not by brilliance. 14th, finally, FTI Consulting is holding its own and showing solid improvement, also after improving its recruiting game in certain segments of the company. Thank you for listening to the Becker Private Equity and the Becker Business Podcast. This week ranked #1 in the Apple Business News podcast rankings. Thank you for listening.